Hello, this is Victor Santana with Stock Hunter's weekly video for June 13th. How's everybody? Hope everything's been going well and you're on the right side of the market. Let's go ahead and take a look at what has happened and what we can expect as far as what the market's going to tell us. Here we're looking at a daily chart of the U.S. total markets, ETF ticker symbol TMW. And as you can see, each candle represents a day, the red line being the 200-day moving average, the blue line the 100-day moving average, the dotted or dashed black line is 50-day moving average, and the green dashed line is the 18-day moving average, along with a stochastics down here. Okay, let's go ahead and see what's been going on here. As you can see, we are showing signs of a divergence here on the stochastics, where prices have reached the bottom on this low point here, and this one practically the same here, while the stochastics, instead of being equal in price like the prices, we are getting a higher high here, and we are now in the green histogram, these bars here on the green side. So as of this date here, basically we're getting the confirmation, and we also got the candle pattern here showing that it's potentially going to go bullish here with us. Now, how far can it go up is the next question, what the market's going to tell us. We have some resistance here on this 200-day moving average coming up right now, and we also got this trend line here. That's going to be a lot of resistance here too, because the last time we hit our heads up here, bounced down, tried to get close to it, came down, and just kind of traded sideways here. You can see we got a channel going this way as far as the trading pattern, and we're getting near to the top here. Now, if things work out potentially strong, we can go as high as up to the 100-day moving average. So first target, this 200-day, second target, the 100-day, and then from there we would consider getting into inverse ETFs and make money going on the downside if this is what the market wants to do. So the overall bias of the whole market right now is still on a downtrend, bearish. So again, you could see that line. So this is pretty much the whole market all combined together, what we see. Now let's go ahead and break this down to the individual indices, and we'll start with the Dow here. Again, the charts are all the same daily, all the same moving averages, and we've got a positive signal at this point down here, followed by a divergent signal here as well. So, and we are now in the green tick zone, green bar zone that is, and plus we broke above the 18-day moving average. So on this one here, we could target is around the red line here, all the way up to the blue line, the 100-day, and that right in this area here. So from there, let's go look at the S&P. The stochastics also created a divergent signal. We are showing green bars, and this is the bottom of here with the positive signal here. Once the divergence with this candle, we are above the 18, so our probably target is the 110.95 area here. If that goes, it can go as high as maybe 112.20, but let's take it one step at a time. Now let's go ahead and look at the NASDAQ, which normally leads the markets along with the Russell. And the NASDAQ, as you could see here, we had practically two divergences, one way back here in this area, May 26th, and did hit its head up here on the 100-day and just bounced all the way back down to practically the same level in price, while the stochastics is higher, causing another stronger divergence here. So we have a potentially go up to this area, has a 46. Okay, and then we got the Russells here, the risky money. Let's see what these people are doing. And we got a divergent signal and a nice candle pattern here at the bottom, and we've gone up. We broke the 200. We're hitting our heads right at the 18 as of Friday. The target area is probably at 66 or at the max around $68 down in this area. So also keep in mind we still got that trend line to contend to. If you go down here, add this trend line here. So most likely, as you can see, these two are starting to merge together. So this is our more realistic target here. Once we get here, the few long positions that we have, we're going to seriously consider getting out of those and start putting some inverse ETFs in play. And then finally, let's look at the global, see what we got going on the global. The global market, the stochastics is showing a divergence just like we did several weeks ago. It bounced up, hit the 18, went back down, and prices virtually about the same price, but not as low, but the stochastic's still way up here. So we have a good chance of getting around the $55 area here. Realistically, going way up here, I wouldn't put all my confidence going up to here. That's kind of a longer shot. So for now, let's go down to the 55 to consider that in here. And we still got that trend line to contend with over here. If we go down and put this trend line, good news is we broke above it. So our next target is 55 in this area here. Now, real quick, I want to show everybody, at least on the weekly. Let's put the weekly in here if we can. And you could see the weekly candle here. They hit support on the total U.S. market, so that's why we're getting that bounce. And look like we want to get a crossing here on the MACD, and the stochastics, the weekly here, hasn't crossed yet, so we got to keep an eye on that for the weekly. But that's pretty much the whole market looks like that, including, let's look at the global. Global here, we're actually in the green bar here on the weekly with a nice hammers formation for the global. And the strongest formation here I want to show is on NASDAQ. Here we're looking at the NASDAQ, and as you can see, we did get a nice strong candle here based on this bounce on the 50-week moving average here. That's why. So we may go up to this point here, the 46.75, which is basically the same as the 46.50 area here. So let's be on the right side of the market and go from here. Till the next time. Bye-bye.